The reason you're unprofitable is because you're still trading ICT, technical indicators, and chart pattern. Let me bring you to a whole different world of trading. The way that the top 1% of traders actually trade. A type of trading that's well kept from retail traders. The tools that banks, institutions, and hedge funds actually use. And that is order flow trading. Today I use order flow to catch this trade. A 1 to 12 risk reward trade that was exactly bottom tick with precise accuracy. Now watch and see how I use order flow, not just to take that trade, but to also see other opportunities within today's price action. Some that even I missed. Starting out the prior day, I always have the zones pre-made. And you can see right here, this was yesterday at 9:53 p.m. And I had these zones that you can look over. And right here is my current context for the market and my daily bias. And you can see right there, my daily bias for the day was preferred sell. But this does not mean that I'm only going to take sell position. It just means that the highest probability positions are going to be sell side trades. You can see right here at the open, my favorite setup was to long the bottom and short at the very top zone. But because my directionality was favored to the downside, I stated that the best possible setup would be 64.14 short. 10 minutes after open, we have price come back to the 63.76 level. After that, price quickly moved to the other zone. Furthermore, you can see as soon as we got to the 64.13 zone, we had a nice rejection all the way back down to the bottom zone. As soon as we got to the 63.76, that's when I took my long position, targeting the point of control. You can see right there, my zones worked amazing already. But why order flow is so important is because we can avoid bad trades, increase our win rate, increase our profit factor, and overall get better trade. So now I'm gonna go over two setups that I missed. So this is why you're trading blind if you're not using order flow. You can see right here, when price comes into 63.76, we can see that aggressive buying was previously here, which you wouldn't be able to see with pure price action. Then we can see there is a heavy amount of selling delta that was coming in. Specifically at this point right here at 63.80. This selling delta would not be able to be seen without order flow. Soon after, price doesn't go lower, which is expected with huge amounts of selling. Price actually goes higher. Because price moved higher off of this, we can consider this trapped selling. So the sellers in this position right here, where there is the most amount of volume, are now underwater. The thing you gotta remember in trading is that if you're making money, you're taking someone else's money. So where there is the most pain, there is the most gain. And because we use order flow to confirm this, our risk reward is a lot better than those that wait for just pure price action. Instead of waiting for the candle to close up here, we can enter as soon as price gets above the area of most volume, which is right here. Following this move, we are also confirmed that the buying is aggressive and willing to take out these imbalances rather than these imbalances holding the price down. I want to show you guys visually what the difference in risk reward is with just pure price action and order flow. As you see right here, this is the order flow trade. And as you see on this side, if we wait for price to close with pure price action and put our stops at the low, you can see we basically only get a 1 to 2 risk reward. But with order flow, with the stops at the low, you can see we're able to catch 1, 2, 3, 4, 5, 6, 7, 8 R. That's a huge difference. 2R versus 8R is humongous. And as you see from the trade that I took today, my trade was even tighter. So the trade at the top, why was this an amazing trade that I missed? Other than the fact that it was a rejection off my zone. One key thing is the cumulative delta at the very top. As you see right here in my Discord, I commented on the amount of aggressive selling coming into the market. And you see right here, this is all the confluences that I seen with this trade that I missed. So basically at the top, I was seeing a large amount of selling pressure coming in. And also we have this prior era of aggressive selling matching with where the zone was at. On top of that, we have huge amount of selling volume coming in the last area where there was aggressive buying failing to hold. So once this massive seller started to hit the bid and price started to go below this aggressive buying with initiative selling, it confirmed the move down. And that's my limit order that never got filled. So now the best trade, how was I able to get the lowest amount of risk with the max amount of reward? The reason for entry in terms of order flow was quite simple. As you see right here, there was an aggressive amount of selling coming in. And I did end up taking a trade right here where there's an aggressive amount of buying coming in with my stops at the lows. And obviously I got stopped out. But why did I re-enter the trade? There was a limit order at the very bottom right here that didn't get filled, and price had a divergence of buying that came in right here. And once buying pressure started to come in again and take out these areas of where selling pressure was right here, and break the social delta also right here, price eventually hit my target up here, which was a swing high and prior value point of control. But that was the trade right there. But that was how I was able to catch a 1 to 12 risk reward trade with precision, with order flow that would not be able to see with just normal candles.